What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting and the trading method we use can be implemented with any company that's publicly traded in the U.S. stock market. Make sure to hit the like button if you enjoy this video. It really helps the channel grow, and thanks to those who continue to watch the videos. Also, make sure you hit the subscribe button and the notification bell. That way you're notified when we release the bonus content that we do release. Aside from the Monday through Thursday nightly videos and the one weekend video, from time to time we release bonus content, so make sure you're notified of that. Now the nightly and weekend videos, like tonight's video, focus mostly on identifying triggers and targets for trades ranging from scalps and intraday trades all the way up to swing and leap trades as well. But if you want a deeper dive into exactly how we set up our charts and the color coding for the different time frames, the different trading levels, check out the bonus content on our YouTube page for more information about this strat, which is the base of our trading method. Check out the free information that we have in the description of this video. But I do encourage you to watch the whole video, because along with just the triggers and targets, we do give some pretty good insight into price action on all time frames. So let's go ahead and get into the agenda for today. We'll go ahead and recap today's price action, then we'll zoom out like we always do and look at the week, month, quarter, and year. Then we'll zoom back in and set our 4-hour markers and triggers and targets for tomorrow, Tuesday, along with a quick review of the triggers and targets for the week, month, quarter, and year. All right, so just looking at today's intraday price action, got it kind of zoomed out so that we can at least identify the 4-hour markers and the triggers and targets, right? So we've got at the very bottom of the chart the previous low a day and the overnight low just barely above it. We have at the bottom of this green box here the previous high of day, which is 44.16, and this green box represents the gap. All right, so we did have overnight high up here at 45.98, and we've got this white dashed line up here that is the 50% line of 2024 last year. All right, so we've got this daily broadening formation here, this orange diagonal line, another daily broadening formation here as well, and we've got the fib extensions of Friday's gap up here as well. So we've got the 200 fib extension, the 250, the 300, and 300 is as high as it goes. So we've got the fib extensions for Friday's gap up. If we zoom in here a little bit, and we look at where we've got our opening print, if you're not familiar with this channel, we have a general rule basically of in the mornings or scalping early on in the day, we're looking for higher lows at or above the opening print or the first traded price of the day, and we want to get into calls if we see higher lows at or above opening print. If we see lower highs at or below opening print, then we want to look to get into puts. And you can see here we got, again, of course, the gap up and the push down and bounce basically off of the 250 fib extension from Friday's gap up. And off of that bounce, excuse me, it did basically make a higher low at the opening print, right? So this is, Friday's last low was way down below the gap up, so this is automatically a higher low here. So if you wanted to enter, you would enter as soon as price went above the high of this candle. You got a higher low here, a higher low here, and a push up to essentially the daily broadening formation and last year's 50% line intersect. And we've also got the 138 fib extension from basically the topping pattern that we looked like we had last week, right? There was a range there that we were looking at as possibly being another long-term range that we might be in for a couple of weeks, like we saw back in June, July, August. But we ended up gapping up over that. But we did have that fib extension up here that aligns with these other levels that we have pointed out, and we can see that we had resistance at that point. Technically made a lower high here, and that could have verified any exits for any quick scalps that you may have had starting down here. And then we kind of just went sideways for the rest of the day, kind of trailed down for a little bit, but we stayed above the overnight high, which is, a bullish signal. Is the more we hang up there, the more it looks like bullish consolidation. And that's, basically what today was, consolidation profit. The November contracts that we had, we were, popping very nicely today. The January 26 contracts that we have, they're way up there as well today. So a very good day, especially you've had swings, but still it presented an opportunity for, a decent scalp early in the day. If you wanted to, you could have played this lower high and played this, kind of slow creep down, but you didn't get a lot of push down, and, you're doing that in the face of an uptrend. So we're just looking for higher lows, higher lows at this point. So that's what we're pushing down to. I mean, if you want to, if you're a scalper and that's something that you like to do, then, I'm not going to tell you not to do it. But if you're looking for what I consider would be, easier trades with a little bit more magnitude, then we're looking for, more pullback longs in this particular market. So we'll see if we've done some type of little blow off top thing or anything like that. But for now, that's how it looks from an intraday perspective. Again, a nice opportunity in the morning to get a nice little scalp. And, if you're at the money, in the money, you've got multiple contracts, it's decent little profit. It was about $1 move in there. So, we jumped on and enjoyed that little bit of profit. And, we're looking at here on the day chart, very bullish from a candle structure perspective, a pretty bullish candle. Now, we've got to note, again, we're running into where a couple of daily broadening formations intersect. There's a weekly broadening formation, last year's 50%. We are towards, the upper end of the market maker's expected move. We've got the market maker's expected move high up here at 48.51. If you're not familiar with that level, check out our weekend video where we dive deeper into the market maker's expected move, where we get it and how we calculate it and whatnot. But we see we've got the gap up, today. We've got the gap up from Friday. So we've got some thin structure. We're hitting some resistance. Wouldn't be the end of the world if we saw a pullback, right? If we did pull back, there could be even just an intraday pullback where we get a bounce off of the top of the gap. We've seen in the past, if you're familiar with this channel, pointed out many instances in the past where we bounced off of gap opens, either from the top side or from the downside, whichever way price action is coming from. We've seen bounces off those gaps as well, even if it is just for a short term. So we could see an intraday drop just to bounce off of that level and push up, maybe hit the market maker's expected move high. We've got a gap up here that we can fill at 49.50. So from the day perspective, very bullish. But again, we're looking at the top of a move here, so I wouldn't be looking to pile into longs at this point. I'd be looking for some type of pullback, and then a trigger to show a reversal back to the upside before I would start really piling into longs again. I know, but at the same time, we are swinging contracts. I'm just talking about new contracts, right? So, excuse me. Again, this is the range that I was talking about right here, where we thought we might run into a range. That's what that fib extension was on the scalping time frame. But again, it's lining up with other levels that we've got out there, so we don't really need it on the chart. But it just gives a little bit more of confidence and us seeing that as a resistance point. So again, we could see a push down tomorrow. It wouldn't be the end of the world, but just from a candle structure perspective, it doesn't look like we're going to see a pullback tomorrow. Could we just go sideways? That's another option as well. So we could just go sideways. Let's look at the week perspective. Let's get out a cleaner chart. And we can see we've pushed above this weekly broadening formation that we've dealt with for a little while. And we're past this 100 fib extension of the, make this a little bit bigger here, of this bull flag here. We've got the flag pole and then the flag, right? So we have the fib extensions here. We hit that 100 a couple of times and saw some resistance. And I talked about how, to get over this broadening formation and this resistance level, we might have to have some type of gap up, and that's what we had. All right, I'm not saying I called that or predicted it, but it's a lot of times what we see in the past when we're running up into a heavy resistance area. It takes a gap up to get up over that level, and once you're over that level, you usually see a little bit of pullback and then a bounce off of that level to continue to move up. But you have to keep in mind later on that there are gaps that will be left behind that and they say all gaps like to get filled. So at some point, we may come back and see that. But for now, we're looking pretty bullish. Just like I said last week, nothing broke down when we had that pullback. We almost went bearish in Gopher, but we didn't, and made that hammer, and we see how we've continued to respond this week. Now we want to keep in mind there's a lot of tech earnings this week, and also the Fed rate decision is on Wednesday. So you want to just, like I said, we're again at the top of a move. You don't always want to pile in when we're at the top. I'm not saying don't get in, because there is still money to be made if we continue to push up. But from a risk to reward perspective, you want to wait for some type of pullback, confirmation of a level, and then a push back up, the reversal signal and a push back up to get in on that, reversal signal. And then you've got more confidence that, we're bouncing off a level of support, and you've got more upside that you can calculate in there. Excuse me. From a month perspective, again, looking very bullish. Two up continuation, nowhere close to coming back down into the last month's price action. Again, we're up here at last year's 50% line, so we got to watch that. But we do have the gap above, and if we get above this last year's 50%, especially if we get a intraday higher low, especially with the gap fill, we've got these fib extensions continued from the flag that we've got here. So we've got a little bit of ways before we would run into this weekly broadening formation. And, I don't see any reason why we wouldn't continue to push up there with the price action that we've already had. So just want to keep all that in line. Let's look at just more of a clear chart there. All right, so we've still got a couple of gaps to the upside. This one up here at 60, I don't know that we would hit that very soon, but I mean, look at these candles, so I can't take it off of the board. The quarter, again, this is my favorite chart of the year, or of the time frames right now, because we had that sorry about that, we had the one combo 2 down, combo 2 up trigger here at 36.15, and we're still above that level, well on our way. The magnitude for that move is up here at 70.08, which is last year's high. So again, we're probably not gonna get there in this quarter, but stack another 2 up on the quarter continuation. If we break through this monthly broadening formation after coming through this gap, maybe even it takes the second quarter, but it does look like we should be hitting that 70.08. Again, it's triggered as long as we're above this 36.15. Now, of course, the further we progress, if we get some type of 2 down, that does technically signify a lower high on the quarter perspective, and then we've got to take the more immediate strat reversal into account until we can get some type of reversal going back up. And then again, if we do get that reversal going back up, as long as we're still above that 36.15, it can be considered in this combo 2 up to get to the high of this one combo 2 down, 2 up. All right, so again, things looking very bullish on pretty much all time frames. Not a whole lot more to say here from the year perspective. We turned around the 1, 2 up, 2 down, made the higher low on the year perspective so far. We're going past a hammer candle at this point. We've got a very solid green candle with a big wick at the bottom. So again, we want to continue to push up and finish at the high of this candle at the end of this year. That way we have the best chance of very easily going 2 down, 2 up next year, which would then have the magnitude of the 70.08, which is the magnitude of the move on the quarter as well. So again, if you're familiar with this channel, you know all about this. We've gone over it, but we do like to keep an eye on it every day, just to keep ourselves level set, right, and keep perspective on where we're at. So that's what we have from today's price action all the way through how things look on the year chart. So let's go ahead and without further delay get into the 4-hour triggers and targets here. Now gotta make this a little bigger. There we go. So we've got our previous high a day up here at 47.16. As of right now, the overnight high is 47.12. Actually, it might have gone up since I charted this, but overnight low is 46.70, and the previous low of day is all the way down here at 45. For 45. Why can't I speak? 45.14. All right, so those are our 4-hour markers. The general rule that we talked about earlier on in the video, we want to look for, let's say for some reason we get a push to the downside overnight. Overnight high is right here, and we get a opening print just below where we closed yesterday, right? So say this price level 46.60 is our opening print. If we get this open and we push up, get a little bit of a pullback, and we get a higher low at or above this opening print price level, then we want to get into calls. Our first target being overnight high, second target being previous high day. Now those are basically the same levels, so you could look to exit, all of your position if you wanted to, or you could exit a majority of your position, let a couple run. But at that point, from a scalping perspective, on the repeatable strategy, that will have met its magnitude or the extent of its targets. So you'd have to turn to the 4-hour and 1-day targets that we'll get to here in a second. That's to the upside. Now, if we get this opening print here, we get a push down, maybe a bounce off an overnight low, and we get a push back up. But then we get this lower high underneath opening print. We want to get into puts, and we want to first target overnight low. It's not the most magnitude in the world, so even if you've got at the money, in the money puts and multiple contracts, not going to net you a whole lot of gain, but you can take profits there. But the overall target for that move would be down here at 45.14. Which is the previous low of day. Now you want to keep in mind, here's an honorable mention level that we have here, this 45.49. This is the opening print for the week, basically today's opening print, which is the first print for the whole week. So that's what we call the week flip. So as long as price is above this level, then the week is green, and if the price is below that level, then the week is red. And you can see in the upper left hand part of this chart, we've got the time frame continuity indicators, and you can see the day, the week, the month, and the quarter are all green. This is a low time frame chart, so the year's not on there, but the year is green as well. And as long as we've got that full time frame continuity in one direction, then you can have a lot more confidence in making plays in that direction. So we won't even if we do get the downside action tomorrow and maybe even get a lower high underneath the opening print for the push down, as you are targeting that previous low a day, you want to keep in mind the week flip. That could be a bounce point, right? That's a major point of inflection for the week. It's where price opened up, so it's a good probability that price could bounce there, especially looking at the uptrend that we're in currently. All right, so that's from the scalping perspective. Let's go ahead and look at the 4-hour chart and get a little bit better idea of what we would do for more of a full day trade, or longer intraday trade, to possibly a full day trade, overnight swing even possibly. So we've got the last couple weeks range down here. We've popped above it. Again, if we get the pull back to the downside, maybe we're just doing that to get the bounce off of this level here to show what was previously resistance is now support, right? That 43.50 level is where we could see a bounce, right? This is the top of that previous range. So if we get the pullback, especially if we get the gap close, we could just be bouncing off, and that would make sense because that 43.80 level is the 100% fib extension from the bull flag from the April low to July high. So that would be a very reasonable place to see a bounce. It's also basically last week's high, so that would further confirm that the uptrend is still intact. So again, the pullback is not the worst thing in the world. If we do get it on the 4-hour time frame, from a strat perspective, you would have a 2-1 2 down that would trigger at the low of the second 4-hour candle of today, or Monday, and it would target the low of the first 4-hour candle, which is the gap open there. Now, one thing to keep in mind as well, if we get that 2-1 2 down, that could be putting a 1 2 down 2 up on the board. So you would want to watch, again, the week flip is not too far above the gap from this morning. So you want to look at that 45.50 to 45 flat area as a possible bounce point, and that second 4-hour of tomorrow could go 2 up, triggering a 1 2 up. 1 2 down 2 up reversal. So if we do get that downside action, there is some magnitude there, and when we get to the bottom of this 4-hour move, there is the gap. So if we poke into that gap, you could have leave some runners and pick up some more profit there. To the upside, we would have a 2-1 2 up continuation, triggering at the high here of this 1, and the magnitude would only be here, this 2 up. So not a lot of magnitude, and again, we'd have to look at our extended targets here. If we bring into into focus. Again, that market maker's expected move high is up here at 48.51, which is just below the gap up here at 49.50. And we've talked about how a gap can be a rejection or a bounce point as well. So it's lining up with the market maker's expected move high. So we could see this, if not a full rejection off this level, but sideways action. Because again, we've got the Fed rate decision on Wednesday, so maybe we get another push up tomorrow, and then in the afternoon we just flatten off. That's a very good possibility, and then Wednesday morning we could just be flat until we get the rate decision. I'm not saying that's what's going to happen, but it's just a possibility, and you can see how that would play into the levels that are on the chart. All right, let's look at the day chart. We'll get something a little cleaner here. Not a whole lot cleaner, but it's cleaner. All right, so again, we have the last couple weeks price action in this range here popped up from candle structure perspective. We're very solid green candle, a little bit of wick on top, but with the level that it's at, this 46.79 level, which is last year's 50%, that's kind of expected. But because it closed such a big green candle, as far as the body is concerned, it's still considered a pretty bullish candle. Now, we're running into all these levels of resistance. So what if we get another gap up tomorrow to gap us up over those levels, and we get into the market maker's expected move high and possibly even the gap up here? That's a very good possibility, but it also is a very good possibility that these levels of resistance will hold and we get some type of either sideways action or the pullback. So if we do get the pullback, and we do go below yesterday's low, that triggers a 2 up, 2 down. That would trigger at the low of today or low of Monday. And first target would be the gap close, obviously, but the full magnitude of that move would be to Friday's low, which is the top of another gap. So that gap could also want to get filled as well. So I'm not saying it would happen all in one day tomorrow. Price does tend to take the stairs up and the elevator down, so we could see the big drop. We saw it here, was at 2 Fridays ago. So it's a very good possibility that we could see both of those filled, but if not, we could see the magnitude met here, and then we could see another 2 down on Wednesday possibly. Who knows? But that might fill the gap there. To the upside, we would just have a 2 up continuation, and we're looking at the market maker's expected move high and the gap fill as our first targets to the upside. We've got the 138.2 fib extension of the bull flag up here at 55.91, so we'll keep that in mind as well. All right, so let's just go back and look at the numbers. Let's go to our notes. Let's go to the notes. And all right, so for just Tuesday, October 28th, that means there will be 43 trading days left in 2025. The close price for Monday, October 27th, was 46.84. So we want to keep that in mind. And we know that the flip, now that we have the open for the week, the price opened at 45.49, which means that the week is green and it flips red at that level. We already knew what the month, quarter, and year flip at, and so we know we're in full time frame continuity to the upside, or they're all green. We know what our market maker's expected move is. And we're up towards the top of that range, so we want to keep that in mind as well. But we do want to keep in mind where the gaps above are, right? Just as much as we want to keep in mind where the gaps below are, we want to keep in mind where the gaps above are. And actually, I do need to fill in this gap, all right? 14, so 45.14 to, there we go. So we know we've got our gaps above at 48 and 59 and gaps below at 45 and 42. So, in between a few gaps there. So we're going to see the push and pull of the bulls and bears. So again, don't be surprised if we get sideways action, or if we just get real volatile action and we get the pullback tomorrow and then we get a push back up on Wednesday, or however it's going to happen. There's going to be a push and pull between the bears and bulls, especially at the levels that we're at now because of the gaps that we're between. We talked about on the 4-hour candle, if we go to the downside, it will trigger the 2-1-2 down at 46.32. The magnitude for that is 45.14, which would then trigger the 2 up combo 2 down. It's a pretty big move, and again, in the face of a uptrend. So we've got some intermediate targets on the way down. So with the 44.65, which is half gap, we've talked about before how those are intraday bounce points as well. And then 44.16, which is the full gap close. All right, and then we've got the full magnitude of the move down to 42.96. If we go to the upside, that triggers the 212 up at 47 flat. Magnitude is 47.16. So again, not a lot of magnitude on the strat continuation as far as a clear entry, clear exit, but that does then trigger the 2 up continuation with the clear entry at 47.16. And then we've got extended targets of 48.51 and 48.79, at least on the 4-hour perspective. We'll look at the day here in a second, but those are our triggers and targets for, more of the longer term intraday play to the full day trade play. Maybe even overnight play, you want to look at the 4-hour, but you'd also want to take into account, the day and the week charts as well, just to make sure everything is in alignment. So that's what we've got from the 4-hour perspective. When we're looking at the day chart, again, if we get price action to the downside, that's a 2 up, 2 down, triggering at 45.14. Target, oops, I don't know where we have a target in there, but we're targeting 44.65 again, which is the half gap, 44.16, which is the full gap close, and 45.80 as our intermediate targets on our way down to that 42.96, right? That's like a I guess it's only a $2 move, $2.15 move basically. But it is in the face of the uptrend that we're in. So we want to have on our plate some idea of where we could be bouncing if we don't meet that full magnitude of that move. Now, if we continue to the upside on the day chart, that's a 2 up continuation, triggering at 47.16. And we've got our targets at 47.97, 48.79, and then 50, which is the gap close up there. Or no, I'm sorry, gap close is, let's look. Yeah, gap close is 50. All right. So we'll just denote that here, gap close. All right, so that's what we've got on the day, right? 2 up, 2 down, or a 2 up continuation, and we've got our triggers and targets there. From the week, I won't go back to the charts for the week and above, but for the week, we have triggered the 2 up, and we are in force, meaning the current close price, this 46.84, is above the trigger. So we have triggered the 2 up, and we're in force, which is why this is bold. First target is 46.79. Oops, I didn't cross that out, which we've already reached. And then second target is 48.79 and then 50. Now we reach, probably put some extra ones on the board, but we do have them on the quarter, just because we're basically at that 50. Didn't think that we were going to get that there this early in the week when we did these, when we did the weekend video. So we'll go ahead and look at some further out targets, and we'll update those on the chart tomorrow. But from the month perspective, again, we're 2 up, very, very, very much in force above that 35.49 level. And again, we've reached the first 3 targets. Now looking for the last 2, and again, we can kind of look at the quarter here for the other month targets, just because we've kind of done them in smaller increments, knowing that we are kind of, I don't want to say overbought, but the move is what a lot would consider overextended. So we don't want to have too lofty of targets that we're not taking notice of what is on the way up, right, as possible points of reversal. So again, 2 up on the month, and we've got our extended targets here. On the year, on the quarter, we've already ran the 2 down, combo 2 up. We've reached magnitude at 36.15, which then triggered the 1 combo 2 down, combo 2 up. We've reached the first 4 targets here. So we've got 48.79, 50, 51.91, and 54.42 as our extended targets. Again, the magnitude of that move is 70.08. So we've got to put some more targets here on the chart above 54 if we get up to that level, which I have a feeling we may have to be doing within the next couple of days. So that's what we've got for the month and the quarter. And again on the year, we did trigger the 1 2 up 2 down at 23.50, but it didn't quite reach its magnitude of 621. We only reached that 723 and reversed on back up to give us a very solid green hammer candle at this point, turning into more of just a solid green candle than a hammer at this point, and giving us a higher low. So want to just continue riding that up on the year. We don't trigger a green 3 or a bullish engulfing candle until 70.08, so we've got still a ways to go before we trigger anything else from the year perspective. But that is your triggers and targets for everything from the scalping to the year perspective. I hope everybody has enjoyed the video. Again, I try to pack in as much information as possible without taking up too much of your time. So I hope I didn't speak too quickly for anyone either. But if you need need to go back and recall anything, we've got the rewind button there, but definitely leave a comment in the video if you have any specific questions or if you want me to go over anything in further detail. So I'll be glad to do that. But if you did enjoy the video, make sure you give it a thumbs up. Again, it really helps the channel grow, and I really appreciate those who have, or we do here, because I'm the one that does the videos, but there's 3 of us here on the team, but that we really appreciate how the channel has grown. It's a pretty niche channel, so we didn't expect a whole lot of growth, but we do enjoy the fact that the information that we can provide is beneficial to some people out there. So that's all we were looking to do. Thumbs up is free. It goes a long way. We have a free channel. We're not selling anything. We just want to make sure we spread this information to as many people as possible. So if you're watching this, Monday night, I hope you get some good rest tonight. If you're watching this Tuesday morning, I hope you had some good rest last night, and hope everybody is refreshed and ready for a good day of trading. And we'll see what Wednesday has on the board as far as the rate decision. But until then, there's still a whole nother day of trading in front of us on Tuesday. So let's use it to our advantage and make smart moves.